In today's video, we're going to take a look at Ready Capital Corporation, ticker symbol RC. This is the 14th video that's a part of my portfolio series where I'm doing an in-depth analysis on all 31 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 14th in this series does not mean that this is my 14th favorite stock or my 14th largest holding. Also note that because I own all these stocks, I am biased towards them, so do your own research before making any investment decision for yourself. Also, let me know if there's any improvements to this series that I can make going forward. Feel free to check out last week's video, which was on Enbridge, ticker symbol ENB, which is a 7% yielding energy stock that's seen continuous growth for decades. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 136.865 shares of RC. Their stock pays quarterly dividends, with their last being for a combined 40 cents per share. With the number of shares that I own of this stock, I receive roughly $54.74 every quarter, or divided by 3, which is what I like to do, that comes out to roughly $18.24 a month in dividends from this stock. Ready Capital is a multi-strategy real estate finance company that originates, acquires, finances, and services small to medium-sized commercial loans. They specialize in loans backed by commercial real estate, including agency multifamily, investor, and bridge loans, as well as U.S. Small Business Administration loans. Ready Capital is the largest non-bank lender to both investors and owners of small balance commercial properties with a current capitalization of approximately $1.9 billion US dollars. This currently makes them the 8th largest mortgage real estate investment trust in the U.S. More recently, the company completed a merger back in February with Broadmark Realty Capital, ticker BRMK, for about $787 million. Since being launched in 2011, Ready Capital has continued to grow its investment portfolio and expand into new sectors. As of the making of this video, their stock currently trades for $10.96 per share, and they offer a dividend yield of 10.64%. Even though Ready Capital has some unique features that I really do like, this stock has been one of my lackluster performers. It's also one of only 2 stocks that I own that have gone through a dividend cut since 2020. Fortunately for me, I didn't start investing in this stock until it was trading all the way down to $12.28 per share. With dividends being reinvested, I'm down 5.65% on this stock, which isn't too bad. But despite being one of the riskiest holdings in my portfolio, I'm still planning on holding on to it as I'm awaiting their most recent merger to benefit this company. So let's take a deeper look into Ready Capital. The company operates in 3 different segments, which are SBC lending and acquisitions, small business lending, and residential mortgage banking. We'll start by looking at their SBC lending and acquisitions. Currently, Ready Capital is the largest non-bank lender to both investors and owners of small balance commercial properties with a current capitalization of approximately $1.9 billion. They currently offer 9 different types of loans, which include bridge loans, affordable housing loans, construction loans, and more. This area of their business has seen a 10-year compound annual growth rate of 20.9%, which shows just how well this company's been able to expand its largest segment. The second division of RC is small business lending. The segment provides capital to small businesses through 7(a) loans, USDA loans, and unsecured small business loans. 7(a) loans are the most common loan program offered by the U.S. Small Business Administration. Ready Capital is one of 14 non-bank license holders approved to issue these kinds of loans. The U.S. Small Business Administration is an independent federal agency that guarantees loans to small businesses. They're typically much smaller in size compared to other types of loans. For example, the maximum loan available for 7(a) loans is $5 million. Since 2015, this area of their business has seen a compound annual growth rate of 54.1%, although it is much smaller than their SBC lending business. The third sector is residential mortgage banking. Ready Capital owns a company by the name of GMFS, which provides residential mortgage loans in the southern United States. They're currently licensed in 18 different states, and their loans are used for various purposes, including home purchase financing, refinancing, and other mortgage products. As of April 30th, they've originated almost $450 million worth of loans. So after going through all their 3 segments, we can see that this company does continue to expand their loan portfolio. But although their business has been expanding, the share price of RC hasn't been seeing that same amount of growth. If we expand the total share price history of RC, we can see it's currently down over 43% since it started trading in 2013. When they launched, it looked like their IPO price was almost $20 per share, which given their value at the time looked a little overvalued in my opinion. We've seen plenty of stories of companies IPOing at overvalued prices, so I'm curious if that's what happened here. It didn't take too long for the market to correct this, as it consistently traded between $17 and $14 for many years. RC was trading for about $16.50 when the pandemic occurred, from which it fully recovered. Then finally, when 2022 rolled around, the share price dropped due to rising interest rates, and it's been attempting to recover ever since. As I mentioned earlier, this company did suffer a dividend cut, and in fact, Ready Capital's dividend has a history of fluctuating. You can see that for a while it was paying 40 cents per share, but then they dropped it to 37 cents before raising it back up to 40. During the pandemic, this is when they really suffered, reducing their dividend to 25 cents per share. But you can see the company eventually recovered it and paid an all-time high of 42 cents per share for a while. But then they reduced it again in December of 2022 to 40 cents. So although this is considered to be a cut, its regular scheduled quarterly dividend as of today is virtually the same as since their IPO. Besides this company's focus on SBC loans, one of the biggest things that I do like about Ready Capital is how they've been able to expand their portfolio. Since 2016, they've either merged or acquired 6 different companies, which have helped expand their investment portfolio as well as grow their diversification. It's a strategy that another MREIT I invest in, Rhythm Capital, has done and seen a lot of success with. Starting in 2016, they did a reverse merger with ZFC, which was a financial company that focused on residential mortgage banking. A reverse merger is when a private company becomes public by purchasing control of a public company. In 2018, they merged with Owens Realty Mortgage, which focused on SBC lending and investing. They also acquired Knight Capital Funding, merged with Atwood Mortgage REIT, which was a REIT really beaten up during the pandemic, Redstone, Mosaic, and then just recently Broadmark Realty Capital. On February 27, 2023, Ready Capital announced that they had entered into a definitive merger agreement with Broadmark Realty, making them the 4th largest commercial mortgage REIT with a capital base of $2.8 billion. As a result of the merger, each share of Broadmark's common stock was converted into 0.47233 shares of Ready Capital's common stock. The merger was approved by shareholders on May 30th and had since gone into effect. At the time, Broadmark Realty was a company that was struggling pretty significantly. Their stock was paying this massive monthly dividend that was completely unsustainable with the amount they were earning in revenue each quarter, and it looked like they were even using a lot of their spare cash on their balance sheet just to keep it at the same level. Eventually, they did cut their dividend by 42%, which was arguably still way too high for them to sustain. After only being a public company for about 3 years, their stock lost almost 2/3 of its value. That's when Ready Capital stepped in and made an offer on Broadmark's assets. In the end, even though Ready Capital got Broadmark's assets at a good value, most shareholders of Broadmark Realty got a bad deal. Considering BRMK IPO'd for around $12 per share, and as a result of the merger, their shares were only worth about $5.90 each, most Broadmark investors probably lost a good amount of money. But ultimately, we don't know yet if Ready Capital's merger with Broadmark was a good idea. When the deal was announced, the share price of RC fell by a pretty good amount. Although this can be attributed to all the new shares of their stock being created from the merger, the fact is that their share price still hasn't recovered from this. It's my opinion that this is a good indicator that many RC shareholders aren't as optimistic about this merger as the management team appears to be. According to the press release, Ready Capital stated that the deal will create capital optimization, which will drive strong earnings per share acceleration in 2024 and sustain long-term growth. So it looks like we won't start seeing the positive results of the merger for a little while longer. At the same time, Ready Capital recently posted their first quarter 2023 results and the numbers were disappointing. Despite interest income growing by $10.5 million from the previous quarter to $217.6 million, the company only received 31 cents per share in distributable income. That's less than the 40-cent dividend this company declared along with their first quarter results. According to Andrew Alborn, who's the current CEO, the drop in distributable income was due to higher operating costs relating to year-end expenses and the continued build-out of their small business lending platform. On their earnings call, Alborn said the following regarding their dividend. As we look forward, the company is well positioned to maintain its dividend consistent with our stated 10% target ROE while protecting book value. This is due to having strong credit metrics on the legacy multifamily book, but also the benefit of net interest margin accretion from reinvestment of $750 million in incremental liquidity. So although he sounds optimistic, we'll have to wait and see how it pans out. More recently, given how much the share price has fallen of this stock, Ready Capital recently approved a $100 million stock buyback on June 1st. Share buybacks are usually a great move because they increase the company's equity value. Since then, the share price of RC has grown by almost $1 per share, which is great. In the end, Ready Capital is a company that I do like, but they've been underperforming compared to other companies in their same sector. If we look at the total return since their IPO, we can see a $10,000 investment would still leave you with a profit, but their stock has only provided an average annual return of 5.62% with dividends being reinvested, which has underperformed a lot of other investments by far. But I do like how they focus on SBA loans, which makes them stand out among other MREITs. I also like how they've been acquiring other businesses to diversify and grow their company. But given their latest results, I do consider their stock to be pretty risky, and I wouldn't blame anyone for avoiding this stock altogether for now. As for me, I'm choosing to remain invested in this stock since it only makes up less than 2% of my overall portfolio. But with that being said, that's going to wrap up today's look at Ready Capital. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.